What is good, y'all? This is going to be the last video you will need to watch ever in terms of continuation trading. This is going to simplify literally everything when it comes to market approach, drawing liquidity, when to enter, when high probable draws occur. So let's get right into it. I'm not going to waste your time anymore, but continuation ideology 101. Let's get right into it. So essentially, how do I approach the market? Let's just go, okay, blindfolded. I wake up at 8:30 in the market open. I'm now looking at the charts just when I wake up. So what is the main thing I look for? Like, I'm literally just going to take you through the step-by-step process and how I view the market every single morning and how I go about it, right? So ideally, I would say on an average week, there's 2-3 days where there's a very high quality draw on liquidity, and it's just an overall high probable day within the markets, right? So first off, you kind of just get that gauge. Do we have a draw on liquidity that is intact and we are in an expansion market? That is when you look to attack price and be more aggressive. Whereas if we're in a range and maybe overnight Asia moved a lot, London moved a lot, and we kind of took out those draws, definitely probably not going to be your high quality, high percentage day where we have a solid draw, right? So boom, market approach. First off, you kind of just get a gauge. Okay, is today going to be a day where it's very high probability? And you can simply just go about that by saying, what are the draws? Look to the left. What are the draws on the day? Do we have a strong objective that you truly believe will draw price to, and more times than not, if you're trading the New York AM, typically the New York AM does draw to that, whatever draw there is on the day, right? So boom, first things first, look at the draws, look to the left. Is today going to be a high probable day or possibly not, right? So that is essentially the first thing I do. And if it's not, definitely, that is when I'll kind of be a little bit more cautious and a little bit more defensive when looking to take a trade, right? Because everybody can look to take a trade, but the kind of approach I have is, okay, what are things that are kind of gonna make me not want to take a trade, right? So essentially, I'm kind of looking at the market. Is there anything I do not like, or what is really, what is going to be the most high probable draw on the day? Because in my opinion, there's always going to be, like I said, maybe 2-3 times out of the week, there's going to be a really good draw on the day, and then once that draw is taken, automatically probabilities go way lower. So if you can identify what is the main kind of magnet for that day, and if you have one that's very clear, then automatically it is a high probable day, and these are the days you look to execute and be a bit more aggressive. Then after you have your high probable draw, what do you essentially wait for? You wait for, okay, what conditions are we most likely going to deliver from? And secondly, is there anything that is holding back price, right? I'll go over yesterday as an example. So yesterday, let's just say you wanted to target these lows, right? So we had these lows as a draw. I'll just go right here. So boom, let me just play one more candle, because yesterday was a perfect example. So let me play one more candle. So their draws right here. You have two very strong draws. Okay, it looks like we have previous day low, previous week low, whatever it was. And so now you're going into market open. This is a high probable day because you now know prices obviously in an expansion market, especially in continuation trading. That is when you look to execute the best. Expanding markets, taking out higher time frame draws more times than not, right? So what do you see? Two strong draws, expansion market, great. Very high probable day. We have a strong draw lower. Now let's look. Is there anything that's going to hold back price from delivering to those lows? Then you just need to wait until we confirm past that area or whatever's holding it back. It could be a low or high in the markets that you need to wait to price to close above or below, or maybe it's an hourly gap. You need to see and wait for price to trade through it in order to confirm your draw, right? Because what happens when you take trades before you kind of wait for this last area that is holding back price? What happens when you take a trade before that? You are now trying to predict the markets instead of reacting when the draw on liquidity is confirmed, right? So boom. First things first, what is the most high probable objective? Cool, we got lows. Okay, now is there anything that is holding back price from delivering to that draw? Yes, in this case scenario, what do you see, right? We are rejecting London lows. Okay, now that I know we are rejecting London lows, what am I going to do? I'm going to be a good boy and sit on my hands and wait until we get a strong candle closure below London lows. And essentially, let's just look to the left. That is essentially the main condition on the day, right? Because let's just look over here. Is there anything really else that's going to stop price from delivering to the objective lower on the day? I don't think so. No, I'm not really seeing anything here. So the last kind of straw of defense, you can kind of look at it. Okay, like what is their defending price to the draw? Once we have traded past that and confirmed that area that is in a sense defending the draw on liquidity, then it's a fucking free for all, right? I don't really get too deep into entries because there's so many kind of variants of entries, but the main thing is identifying the high quality objectives and draws. Then identifying what is holding that price from delivering to that draw. And as long as you are not trying to predict a trade to the draw before we have confirmed past your last straw of defense, in this case scenario, it looks like this, right? I would say we are rejecting London lows and we're kind of respecting this gap in price right here, right? So essentially, once we close below that area, what are the probabilities of any entry whatsoever playing out to the draw on liquidity as long as your stop loss is protected? As long as your stop loss is protected, it is a very high probability, right? So let's just think logically. What do most losses come from when trading a continuation model? Firstly, trying to predict price before we have confirmed to the draw on liquidity, and that could be taking entries all up within here, right? We are still rejecting these lows, and you have not waited until we have confirmed to the draw yet. So boom, those are when most losses occur, when you are trying to predict the move before you let NQ show you its cards, right? You want to wait and react for price for NQ to say, okay, we have now closed below this area that we have been rejecting, and there's not really anything stopping price. So most losses come from you taking an entry before the fact, before we have confirmed, before we have traded past that kind of last straw of defense. And secondly, it just comes from the base one route, right? Like what did I say at the very beginning of the video? You need to identify high probable days within the market, high quality objectives, high quality draws and liquidity. And the second biggest reason for losses is just simply trading those days, right? There's gonna be a day, like every single week most likely, where we are just trading in a range, or overnight has expanded a ton, taken out draws, and more than likely the New York session is not going to be as probable, right? So the second reason why losses occur is you just not being able to differ the difference between a good day and a bad day, and that's really just stems from draw on liquidity. If there's no strong draw on liquidity, that's like shooting a jump shot blindfolded, right? You want to shoot a jump shot with wide open eyes, and that is just really when you have high quality draws like today, right? So that is essentially when most losses come, trying to force trades before it's been confirmed. And secondly, when there's just no real draw on liquidity in general and you're just trying to get a trade in, you're just trying to take a trade on the day. So essentially that is the approach I have every single day. Firstly, what are the draws? Cool. Is there anything stopping price from hitting those draws? Yes. Okay, let me wait for price to confirm past that last level of defense. Then the entry is a free-for-all as long as your stop loss is protected, right? Let me get into the third reason why losses occur, and that is simply trying to get all cute with your stop loss. And that looks like this. All right, so let's just take an example. So boom. Let's say, blah, 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 blah. I think I can get a good example here. Yes, okay, so let's say, boom, you want to, okay, the draw is confirmed, yada, yada, yada. Okay, now I'm saying, okay, like the entry doesn't really matter, right? But it doesn't really matter as much because overall the probabilities are in your favor. You waited for the price to confirm to your draw. Then you could be doing everything right. You could be doing everything right. You can identify a high quality day. You can wait until price confirms to that draw on liquidity, and there's no real last line of defense before your draw. So you might just saying, oh, I'm good. Like I can just take an entry and I'm good. Wrong. That is where you're wrong. You need to ensure your stop loss is protected, right? Because everybody can take an entry, but if you try to get too cute with rocking a smaller stop loss where it is not protected, then that is where you go wrong. And that is the third main reason why losses occur, right? So I kind of look at it like I like to look at it as like, oh my gosh, I like to look at it in this lens. So if you're taking an entry and your stop loss should always be where like it makes it where if price were to go there, the trade idea is fully invalidated, right? So let's just kind of think here. Right? So let's just say, boom, you try to get all cute rocking a small stop loss right here and ask yourself, okay, if price were to go where my stop loss is the trade idea invalidated? That answer should be yes. In this case scenario, the answer is no, right? So ensure when every single entry you take, once you have identified the high quality drop, once we have passed every line of defense, we have closed below lows, we have invalidated gaps, then so your biggest mission should just be, okay, where can I get an entry where my stop loss will be protected and there's no room and there's no possible way, if my draw on liquidity is right, where we go to that draw and I get stopped out. So essentially that more so looks like not this, because boom, you get fucked and we still go to the draw, right? Whereas if you would have taken some entry like this and you had not been all cute trying to get a 1 to 4 RR, you could have just actually swallowed your ego and said, okay, let me just rock a big stop where price goes most likely up here. Then we're probably not gonna, then the trade idea is probably invalidated, right? So just make sure and ensure that your stop loss is always at a point where price could retrace, possibly could really just go up a little bit. You could be like a little bit of drawdown, but just ensure and always ask yourself this when placing your stop and when placing a trade. If price goes to this area, is there a higher probability that we do not go to the draw on liquidity, or we still do? You should never take a trade, you get stopped out and price still goes to the draw on liquidity. That kind of just infers that your stop loss placement is definitely not in the right spot and you placed it where it was not protected, because obviously we still stopped you out and we still delivered to the draw. So that's kind of the main three factors why you take losing trades, kind of the approach I take when it comes to finding a high probable day, then so waiting when it's okay to enter, and then third, obviously, stop loss placement, right? Because your probabilities will be so much higher if you can just identify those good days, wait until we've kind of just sit on your hands, scroll TikTok until we've gotten to that point where we're saying, okay, now there's nothing really stopping price from going to the draw on liquidity. Then any entry within that kind of zone or wherever it is always going to be a much more high win rate system, a much more high win rate trade compared to if you're just trying to predict trades before we've confirmed the draw, or overall it's not a high probable day whatsoever because the draw liquidities are already taken, right? So continuation ideology 101. Hopefully you guys enjoyed this video. Again, I'm not sitting here teaching you, okay, there's a two-step process. Wait until we hit a 5-minute gap tap and 1-minute IVG, 100% win rate. No, that shit does not work, but that shit is not real. If anyone ever says that to you, right hook them. Because, God, man, if you take any gap tap and IVG or just, it's not going to end up well for you. You need to generally understand conditions within markets and making sure when we have confirmed and actually just understanding kind of the probabilities within different levels of price, right? When we are rejecting an area, like let's just see if I can get an example here. Please give me an example. Yes, great, right? Great example, right? When we are rejecting an area, boom, we are clearly rejecting this low, right? We are rejecting this low. Okay, cool. So what do I now know? Okay, we are rejecting this area in price. Now, probably any entries back to the area where we've already taken a draw on liquidity and we've been rejecting are going to be a lot less probable, right? So it's really just understanding when is your kind of time, when is the time slot, when is the zone, your go zone, your aggressive zone, your offense zone, when is that going to play out? And then that is when you look to, boom, execute like a motherfucker. So with that being said, hope you guys enjoyed this kind of simple mindset thing, continuation ideology. Hopefully this, guys, helps you when it comes to approaching every single day, looking for draws, regardless, rocking safe stop losses, waiting until we have got past the last line of defense to your draw. That is when your trade will be the most high probable and most high win rate. So hopefully you guys enjoyed this video. If you guys want to join the inner circle and be a winner, you can apply in the description. If you guys want accounts with Alpha Futures, code Jack will give you a discount. Follow the Instagram, follow the TikTok, and subscribe if you like this content, and I will see you guys in the next one. Peace.